Hey gang, it's Monday, April 27th. Danny Ross and listeners, welcome to Behind the Numbers, an eMarketer podcast. I'm Marcus, and joining me for today's conversation, we have two New York people. One of them is in Brooklyn, our senior editor of the Marketing and Advertising Briefing. It's Daniel Konstantinovich.
Hello, I'm actually in Queens now, so can't claim Brooklyn anymore.
Stay still. Congratulations on the move. When did you move? Oh, you did
like
move.
2 years ago.
You moved a really long time ago. Yeah, you're still in Brooklyn in my head.
Marcus, you've probably been in a dozen cities during that time.
That's true.
Let's blame it on that.
Keep track?
Thanks, Ross. He's in Queens now, but there he is, Danny Konstantinovich. We're also joined by another gentleman who is just north of the city, I believe. Maybe he's moved too. Senior analyst covering digital advertising and media, Ross Benish.
Hey, I haven't moved because it's hard to do that with kids.
Virtually impossible. Anyway, today's fact is where we start. Where did the US national anthem come from? So.
No.
Do you learn this in school?
For sure, but
okay.
Isn't it at this drinking song?
Was it a drinking song? America.
It was. Should we answer, or do you have?
If you know, I had no idea, so I think it's a tough question. Unless you were taught this in schools and you forgot it, then shame on you. But if you didn't know, I wouldn't be surprised. But if nothing comes to mind, I can just say it. The Star Spangled Banner. Go on.
All right. I want to guess. It's like a wartime song, but I feel like I remember it was not written during the Revolutionary War. It was a later one, if I'm not mistaken, or maybe I'm wrong. Okay.
Yeah.
Wow.
No. It comes from a poem written by Maryland born Francis Scott Key in September 1814, titled "Defense of Fort McHenry." The poem or anthem. It's 4 verses. You basically took the first verse, and that's the national anthem. It's set to the tune of a popular British song, the Anacreontic song by John Stafford Smith. So it has the same kind of melody, and was officially adopted as the US national anthem March 3rd, 1931 is when it was officially adopted. But that's where it comes from.
So I thought the song it was based on was a drinking song, or the poem that it was based on, like the English origin.
Probably.
I could just be making that up, though. I don't retain much from what I was told in high school history.
Who does? Anyway, today's real topic, the 3 big questions, we'll figure them out, surrounding Netflix. All right, folks, let's set the table first. Q1, Netflix made over $12 billion in the quarter, growing revenue 16%, 16. That's faster than last Q1's 13% growth. US revenue, which makes up 43% of Netflix's money, grew 14%, 14, also faster than last Q1's 9%. So that's how Netflix did recently, but we're talking about the 3 big questions surrounding the company at the moment. What's on their mind? What's on our minds? What's on journalists' minds? What's on analysts' minds? Danny, I'll start with you. What's one big question for Netflix at the moment?
I feel like a timely one is what will Netflix do, or where will Netflix expand to make up for the Warner Brothers Discovery deal falling apart? But I have an asterisk to that question, which is, does it even need to do anything to make up for that? It's already, the subscription streaming leader. It would have obviously become even larger with this Warner Brothers Discovery acquisition, but they got a tidy couple billion from the deal falling apart, which is nice for them to pocket, and they still seem to be poised to stay on top for the time being. So yeah, I'm curious what.
That's a great first question. I'd reworded it. So mine was, will leaving Warner Brothers Discovery behind be a good move long term? Ross, what do you think? Because short term, as Danny said, they got a tidy $3 billion termination fee from Paramount for not getting Warner Brothers Discovery. So that hit the bottom line and that felt good. But long term, do you think this is going to be a miss for Netflix?
No, I thought they won by losing there. That not getting Warner Brothers Discovery was actually a good thing for them. Allows them to be more nimble, and they got the termination fee, and then they have one of their biggest rivals tied up in courts and regulatory limbo for another year to 2 years while Netflix continues to chug along. And that combined company, I can't say combined for something. That combined company of Paramount and Warner Brothers Discovery is going to struggle. They're going to have massive layoffs. They're going to have a huge amount of debt. So I think Netflix, by not overpaying, did the right thing for them there. And to Danny's point, what do they have to do? I'm just going to use that as a segue into something I thought is a big question is what's Netflix's live sports strategy? Because they mentioned live sports on the earnings call more. They've been doing that lately. They actually mention it directly in a way that they didn't before. And they kind of flirt with live sports here and there. They had MLB opening day. They'll have a few NFL games. But clearly they're building to have something more substantial than a one-off game or a one-off fight. And what is that gonna be? And that could be, even though it's not scripted entertainment, that could be the content that fills the hole that Warner Brothers Discovery's content library may have.
Yeah, I think that's a super interesting one. On the earnings call, Greg Peters and Ted Sarandos, those are the two current co-CEOs.
Yep.
Yes, okay, got it. Because there were headlines bouncing around today about the former people in charge. Anyway, on the earnings call, they were talking a lot about live sports, and they were talking about the NFL in particular, which I thought was really interesting. And I'm hinting at one of my questions that we can get to later. I wonder what the live sports strategy is for them, because like you said, they have these one-off tennis matches, fights. They have the WWE, which is sort of like a longer term sports season, I suppose. But the NFL is like the marquee live streaming event that all these streaming services want a piece of, and Netflix has claimed sort of bits of it. It seems like now in the long term, it's going to be harder for them to claim a more meaningful share of the NFL season to broadcast on Netflix, just because of the Disney ESPN NFL deal that's out there, although that's facing some regulatory scrutiny. But something that caught my eye in the earnings call was that Netflix was talking about looking for more individual games that they can eventize. So they were saying that they want the season opener game is something they said they would love to have on Netflix. And that strikes me as something you can really clearly build a big streaming event around, in the same way that you could with like the Christmas Day game or Thanksgiving Day games. So I wonder, if they want a more meaningful slice of these full sports seasons, or if they just kind of want one-offs with specific timing.
Yeah, I think it's a good one. Jessica Tunkel of the Wall Street Journal was noting Netflix is looking for a 4-game NFL package. It's entering its last deal, believe it or not, of the 3-year 2-game deal. So it had 2 games on Christmas, and that was a 3-year deal that they signed. But they want to renew the Christmas Day games and perhaps add a Thanksgiving Eve game and an international game, which could be in the season's opening week. Could be, as Danny said, maybe the opening game of the season potentially. So maybe it's event focused. Maybe that's their goal. Because they when you look at it, they're kind of it still seems like they're throwing everything at the wall, right? Because my question was, will they start to coalesce around a particular sport, a couple of sports, or strategy? Because they have, as we've mentioned, WWE wrestling, NFL games, one-off boxing events. They've got MLB games. Then you've got the non-sports like award shows, and apparently going to maybe reboot a talent contest, Star Search. But Isabel Busquet of the Journal was noting, since March 2023, Netflix has broadcast more than 200, so 3 years, broadcast more than 200 different live events. And if someone asked me what their strategy was, I guess event-based.
I feel like throwing spaghetti at the wall and seeing what sticks has been the content strategy for Netflix, even beyond live events. This is what they do with scripted series. That's, people complain all the time that Netflix is canceling shows after season 1 or season 2. This kind of feels in line with that approach to me. Like, if we can just come out with a lot of different live events, we have a higher chance of a hit rate than if we just focus on a few limited ones.
Yeah.
Here.
Yeah. Yeah, it's a good one. So I've got one for you guys. Mine was, so Netflix said it will double ad revenues this year to reach $3 billion. My question is, can they? And so our forecast crew thinks Netflix will nearly double US ad revenues this year, growing close to 90% to 2.4 billion. So they're
We
pretty
also had to knock
optimistic.
down the forecast quite a bit recently because
Oh, interesting.
we were
Yes.
exceeding what Netflix had reported. So like last quarter, Netflix reported
Mm,
1.5 billion. First time they ever shared a number. And we were higher than that in the US alone.
okay.
So we had an adjustment to go down because now we finally have more information than what we had before, and it was lower. So we have that outlook, but that just kind of gets us back to what we were anticipating beforehand.
Okay. So the total number down, the growth a bit lower than what Netflix is expecting. Do we think they can reach that? Do we think that doubling ad revenue from whatever number to whatever number, do we think close to doubling ad revenue is on the cards?
I think it's certainly possible. I wouldn't write it off. They came out in this most recent quarter and said that they are sticking to their projection of doubling the ad revenue. So it seems like there's some confidence there.
Hmm.
They keep making these moves to widen the gap between ad-free streaming and ad-supported streaming. So ferrying more users to the ad-supported tier, enticing new customers
Hmm.
to join the ad-supported tier over ad-free ones.
Yeah.
So
The
I
price
could
increases are helping with that.
Yes, for sure. Exactly.
Hmm.
That's like the main mechanism that they are
Hmm.
using to get people to switch over. Or, motivate people to
Yeah.
switch over. Who knows if it's working yet.
Yeah.
But if they are able to expand their live sports portfolio meaningfully, I could definitely see it happening. They've been opening the doors to ad channels. Like programmatic buying on Netflix is now a thing that wasn't there in the first couple of years of its ad business being open, and I'm sure that will entice a lot more advertisers to buy on Netflix
Yeah.
since it's a mechanism that they're familiar with. I have a question about the ad revenues as well,
Mm,
but I'll save that for after this one because I want to let Ross chime in.
sounds good.
Well, yeah, I mean they can hit it, but they've been below expectations basically since launch. If you were to ask people like 4 years ago, around the time that they would have been preparing to launch an ad business, where would they expect them to be at the end of 2026? I think they'd expect a lot larger figure.
Yeah.
A few $1 billion to Netflix is actually not that much. Way, way, way below subscription revenues and below other advertising platforms on CTV, even though those products have much less overall usage.
Hmm.
You'd see like the combination of Hulu and Disney Plus with more revenue, Roku with more ad revenue, but Netflix use, was the top outside of YouTube. So it is possible, but they haven't really met their advertising goals so far. So
Hmm.
I wouldn't count on it.
Yeah.
Oh, sorry. Go ahead, Ross. Or Ross, Marcus.
Were you going to move on to say something about
No,
this
I
point?
had a
Please,
follow-up question
please.
about this. Yeah, I wonder, your point about Disney and Hulu is a really interesting one, and I wonder if you think that's a function of the existing advertising relationships that Disney had, or when Netflix came out and said it was advertising, it definitely seemed like a last minute announcement to soften the blow of its kind of first rough quarter in many years or ever, perhaps. Um, and there was a lot of buzz at the time of, this is the company that drove the shift to streaming and digital, so they could make a huge splash here. But to your point, I don't think that they're growing as fast as anyone expected, and certainly not as
Hmm.
fast as they would have hoped. So
Yeah.
yeah, I'm just curious about why you think that might be.
Yeah, to your point about it being rushed out, I mean, they built so much, but yet with advertising at launch, they relied on Microsoft. So, um, with Disney Plus and before that Hulu, yeah, they've been selling ads forever at that company. Hulu, God, I don't even know when the first Hulu ad would have launched. Like that's like a streaming original thing. Disney Plus didn't have ads at the start, but they had the whole team and infrastructure once they put the ad tier on. It's a lot
Hmm.
simpler to get to $1 billion for a company that has an advertising infrastructure than one who's building it and creating it for the first
Yeah.
time. So that's something Disney has an advantage on them for sure. But not just Disney. I think you see the ad sales have climbed faster at several other companies than they have at Netflix, even though their streaming service may not be as popular. And maybe they don't need advertising to be, everything for them. They have such a healthy
Right.
subscription business, but it's clearly, I don't even know if I'd say it's second fiddle. It's like a third or fourth fiddle. Um, Not an afterthought, but in terms of revenue share, quite minuscule. And it's gonna be a long time before that changes in a
Right.
meaningful way.
I'm curious, yeah, are these growing pains, or is there something, I won't say flawed in their strategy, but maybe something that they need to change to make this become the business that they're hoping it to be, or are they, intentionally trying to roll this out slowly because adding too many ads and in terms of ad load and bumping up the price too quickly can turn people off. So I wonder if the slow game is going to really pay off in the long term. We mentioned the price increases. Marissa Jones, who's one of our newsletter analysts, was noting that Netflix, they recently raised US subscription prices, which could nudge ad-free people to pay more towards the ad-supported alternatives, of which there are 88 million ad-supported Netflix subscribers in the US. That's about a quarter of the population. But ads now, if you want to avoid them, it's going to cost you for the standard plan about $20. And if you can go down to the ad-free one, that's only $9. So it's quite a big drop, especially as things are getting more expensive, and so people looking to trade down in certain places. And then Danny was saying, like, is it working, the kind of the mechanism to move people from one to the other? Senior analyst Garja Sevilla pointing out that in Q4 2025, the ads plan accounted for over 55% of new signups in markets where it was available, according to Netflix. A big reason being affordability has overtaken content as the top reason consumers are canceling.
A lot of ad users though are light users. Not this quarter, but the quarter before that.
Mm,
Netflix noted on the call that they make more revenue per membership on the ad-free plan, and that's going to be even more so the case if the prices on
mhm.
the subscriptions get jacked up. You're only going to have a higher ARPU on an ad plan if people are sitting there and watching the ads. But a lot of
Yep.
people who are like, well, I'm going to pay under $10 for Netflix. Netflix probably isn't their priority. If it is, they're willing to pay the extra $12 or so and avoid the ads. So,
Yep.
it's a lot of the casual users that go to the ad plan.
Yep. Yep. Dan, you had another question on advertising.
Yeah, a follow-up to kind of what we're talking about, I suppose. I have a question here. Can Netflix ever close the ad revenue gap with YouTube? Netflix is
Mm.
often talked about as a streaming leader, but YouTube dwarfs it in terms of ad revenues.
Hmm.
We forecast that Netflix is going to make about 4.5 billion in US ad revenues by 2028. YouTube is going to make about 4 times that by the same or in the same amount of time. So I wonder if they can ever eclipse it, but to Ross's point, in our last or what we were just talking about, maybe it doesn't need to. The subscription business is very healthy, and it definitely has YouTube beat there in terms of
Hmm.
what something like YouTube TV contributes to that company versus what the ad-free Netflix subscriptions contribute to them.
Yeah. Yeah. Um, Ross, any other questions?
Just one last very basic one is what's life at Netflix like without Reed Hastings?
Yeah. Yeah. This is a good one.
Yes.
Yeah, I had Will the company be okay after Reed Hastings. So it's co-founder, longtime former longtime CEO, leaving the board of directors later this year. So he's already stepped down as CEO. My answer was yes. They'll be okay because they're very well positioned to weather the transition. Two reasons I thought. One is he already stepped back from driving the car about 3 years ago, fully handing over the reins to co-founder. At the time, the one co-founder was, co-CEO was Ted Sarandos. So the current co-CEOs, Ted Sarandos and Greg Peters, this is the second point, have also been at the company forever. And so it's not as though there's kind of this turmoil of, his exit has been hasty and that the new people, the new CEO or CEOs, don't really know anything about Netflix. Sarandos has been at Netflix for 26 years, almost since day one. Head of content for 20, and then co-CEO for the last 6. And Peters has been at Netflix for 17 years, head of streaming and partnerships, head of products, COO, CPO, basically all the main roles, and now co-CEO for 3 years. So I'm going to say they'll be okay. Danny, what do you think?
I agree. I do think that the Peters Sarandos co-CEO ship will have tensions that will show in some aspects of the business. Just during the Warner Brothers Discovery Paramount deal, there were a lot of there was some news trickling out in the press about conflict between the two CEOs, one of them being more interested in the deal than another. And I suspect that you'll see more narratives like that in the coming months, years, however long it takes for the company to pick just one, which I assume they will do at some point.
Yeah.
I can't say that I have great insight into what Sarandos's priorities are versus Peters and how those tensions will materialize, but it seems like the stage is set for there to be, further tension there, and I'm sure the two of them will be throwing their weight around to try and get the top position.
Why do they have 2 CEOs?
Paramount had 3 there for a little bit.
Oh, they did? I'm just looking up to see
Yeah,
if
they called it like Office of the CEO.
Okay. Yeah, Oracle, Comcast. There's not a ton, but it's an interesting strategy. Seems to be working so far, but yeah, as soon as 2 start pulling in opposite directions, it could be quite contentious. Anything else, Danny? What else do you have for us? Any other questions?
No, I think we kind of covered it. It seems like we
Excellent.
all had questions about sports, which was
Mhm.
one that I didn't name, but we were talking about it.
Yeah, absolutely. So we're going to pick just 3 because we've always got more than 3, but we'll try to figure out the top 3 here. Daniel, I'll go to you first. Which one do you want to keep?
I think we should keep the live sports plan one. I think it's a really interesting aspect of Netflix's business, somewhere where there's a lot of news happening, and the strategy could develop in a number of different ways. So I think that's one to keep an eye on.
Excellent. What is Netflix's live sports strategy? Ross, what do you want to keep?
What Danny said about Warner Brothers Discovery, and then, what do you do with the termination fee revenue? What would be like something that's related to that? Do you invest that into content because you were already planning on spending it, or do you just put it in a cash reserve fund?
Yeah. Very nice. The retastings one is interesting but I don't think it's as big of a deal, and it didn't seem like any of the outlets I was reading for this think it's that big of a deal either. It's only a big deal because it's happening and he's been there for 30 years. But I think Netflix saying it would double ad revenues this year could be quite interesting, because if they come anywhere close to that goal, then the question becomes, what does next year look like? Can they be close to double that? I think we're expecting the growth to drop quite a lot. I mean, still, I think high 30% growth from next year in terms of ad revenue from Netflix, and then the year after that still I think in the low 30s. So we still think it's going to be very strong, but yeah, can they start reaching those numbers that really have investors and Wall Street interested, and also can they get close to the crazy numbers that YouTube is doing? So that's our top 3. What is Netflix's live sports strategy? What will it be? Number 2, what Netflix needs to do, if anything, to make up for the loss of Warner Brothers Discovery. And then number 3, Netflix says it will double ad revenues this year to reach $3 billion. Can they? There are top 3 questions for Netflix at the moment. Thank you so much to my guests for helping me put them together. Thank you first to Danny.
Yeah, of course. Always a pleasure.
And of course to Ross.
Thanks, Marcus.
Yes, indeed. And thank you to Lance from the production crew who's helping us out with this one. Thanks to everyone for listening to Behind the Numbers Marketer podcast. Watch upcoming episodes of our video podcast on YouTube, Spotify, and now with video on Apple Podcasts. Tune in Wednesday when Susie will have the April Retailer Awards for you on reimagining retail. From Austin, which I just realized has pretty low rents.
Austin? That surprises me.
I know. Zillow. This is from Visual Capitalist. Zillow Observed Rent Index, Wallet Hub. They've got the 100 cities with the highest rents in the country.
Wonder where New York is.
You won't be
Maybe I don't wanna
surprised
know.
to learn New York is second.
Oh, second. That's better than I
Yeah,
thought. I
three
thought
and a
first.
half.
Is that
I guess-
San Francisco #1?
Yeah,
Huh? Yeah.
that makes sense.
3.8 grand. New York's is 3.7. Boston's 3.5. Jersey, 6th.
We got to get those numbers
3.
up. Greatest
But
city
yeah,
in the world.
Austin is like Austin's 1.5. It's
Not
like
bad.
I don't even know where this is on the 50th. It's way down there. 100 cities. Actually, it's got to be like more like 60th. That's really low. Which makes sense because when I was there, my friends were like moving into new places, and the places they were moving into were giving them like first month free type of discounts. It's wild.
That's like I thought that went extinct after the pandemic.
Yeah, I know. I couldn't believe it. But this is saying Austin's more affordable than like Raleigh, Phoenix, Richmond, Dallas, New Orleans, Minneapolis, Durham, Colorado Springs, blah, blah,
I'm
blah.
surprised it's cheaper than Minneapolis.
Yeah.
That is really surprising. I have
This is
friends
like-
in Minneapolis, and
Shocking. Portland,
Great
Baltimore, Knoxville,
place.
Charlotte, Boise. Wild.